Side hustlers, let's have a real talk, because the IRS absolutely knows you exist, and they are not sending a friendly reminder before they send a penalty notice. Every year, millions of people earning extra income on the side wake up in April absolutely blindsided, and we are going to make sure you are not one of them. Here's what is actually happening under the hood. When you work a traditional job, your employer quietly withholds taxes from every single paycheck before you ever touch the money. But the moment you go independent, freelancing, driving, selling, tutoring, whatever your hustle is, suddenly you are the employer, the accountant, and the taxpayer all at once, and most people have no idea what that even means. The IRS operates on a pay-as-you-go system, which sounds reasonable until you realize that as you go means 4 times a year through something called estimated quarterly taxes. If your side income is going to exceed $1,000 in tax owed for the year, you are legally expected to be prepaying that bill in chunks April, June, September, and January like a subscription you never signed up for. The cruel irony here is that the people who ignore this rule are often the most hardworking, most ambitious people in the room, the ones grinding on weekends and building something real. They skip the quarterly payment, tell themselves they will sort it out during tax season, and then get hit with an underpayment penalty that feels like a slap from a system they were just trying to participate in honestly. Now, the penalty itself is not catastrophic. We are not talking prison time, but it compounds like a slow leak in a tire, and by the time you feel it, you have already lost pressure. The IRS charges interest on underpaid amounts based on the federal short-term rate plus 3%. And in recent years, with elevated interest rates, that number has quietly become more painful than most people expect. Let us bust the biggest myth right now. A lot of side hustlers think, I will just pay it all in April and it will be fine. That is not how the system works. The penalty accrues from the moment the payment was originally due, not from the filing deadline, meaning you can owe a penalty even if you pay your full tax bill on time in April. Here's the part that should actually excite you though, because there is a safe harbor rule that is basically the IRS offering you a peace treaty. If you pay at least 90% of this year's tax liability, or 100% of last year's total tax bill, 110%. If you earned over $150,000, you will owe 0 underpayment penalty, full stop. The behavioral trap most hustlers fall into is treating their side income like found money a bonus, a gift, extra padding rather than gross revenue with obligations attached. Think of it like running a tiny business where roughly 25 to 30% of every dollar you earn is already spoken for before you celebrate. And the discipline of mentally quarantining that money the moment it arrives is genuinely the difference between thriving and scrambling. Historically, self-employment tax is the gut punch. Nobody warns you about it. It's 15.3% on top of your regular income tax, covering both the employee and employer sides of Social Security and Medicare. The silver lining is that you can deduct half of that self-employment tax when calculating your adjusted gross income, which softens the blow, but only if you actually know it exists. The practical playbook here is straightforward and unsexy, which is exactly why it works. Open a separate savings account, move 25 to 30% of every side hustle payment into it immediately, and pay your quarterly estimates using IRS Direct Pay on or before the due dates. This is not exciting. This is not a hack. This is just the boring discipline that separates people who build wealth from people who stress every spring. There's something almost poetic about the fact that the same trait that makes someone a good entrepreneur, optimism, momentum, a bias toward action, is the exact trait that gets them into trouble with estimated taxes. Because optimists assume they will figure it out later. Discipline in this context is not pessimism. It is just respecting the math enough to let it work in your favor instead of against you. The people who navigate this best are not necessarily the ones who earn the most. They're the ones who treat their hustle like a real business from $1, keep clean records, use something as simple as a spreadsheet or a free tool like Wave or QuickBooks Self-Employed, and never confuse their bank balance with their actual take-home. Process beats conviction every single time in this game. At the end of the day, The tax code is not your enemy. It is just a system. And systems reward those who learn the rules and penalize those who assume the rules do not apply to them. You do not need to be an accountant to protect yourself. You just need to be slightly more organized than the version of yourself who thought April would sort everything out. Whether your side hustle turns into an empire or stays a weekend experiment, building the right financial habits around it early means you keep more of what you earn, sleep better in March, and show up to tax season with receipts instead of regrets. That is not just smart money management, that is self-respect in spreadsheet form. And if your hustle is pointing you toward real estate, home improvement projects, or you need help connecting with the right lenders to make your next move, check out our links in the description below. We can help you get started.